Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to show how we use multi-time frame analysis to be able to gauge our large degree trend to get our trade setups in the direction of the large degree trend. And I thought there was a very interesting example here on the British pound US dollar, particularly as we had the interest rate hike in the by the Fed in America yesterday, which was the 16th of December, which was this wild bar here. This is actually a 4-hour chart of the British pound, but I'd like to show you how MTPredictor would have already been in the correct direction on this particular trade. As you can see on our 4-hour chart, we actually had a TS4 sell, came in here on the 11th of December. If we place the analysis on, that indicated the market should decline down into the 48, 51 and a bit area down here. So in other words, the large degree trend has been down on the 4-hour chart since the 11th of December. I'll just take that off. So how could you have traded this? Well, as the large degree trend on the 4-hour chart was down since the 11th of December, you want to be looking at shorter term charts for your trades. So let's go down to an hourly chart and let's have a look at what we got on the hourly chart. Here was the 4-hourly high on the 11th of December again. This actually gave us a DP sell up here. That may well have been a very aggressive trade to try and take because the 4-hour chart was just in the process of confirming a high. So I think the safer trade would have been here, this TS1 sell on the 14th. Can you see that? That was on the 14th of December. The reason being is because the 4-hourly chart had put in a TS4 sell, the large degree trend was down. Let's place the analysis on here. Because this was a major high, because it was a TS4 sell on a higher time frame, in other words the 4-hourly chart, we should look to run this trade a bit further. And in fact you could have traded this as a holy grail trade. In other words, this would be the initial decline of an important high, that being the important high. The initial decline down would be a wave 1. This would be a wave 2, which unfolds as an ABC. Therefore we're looking to go down into the typical wave 3 WPT, which is this area here. Remember, we use correct position sizing to vary our number of vary our number of lots, contracts or shares. I'm using mini lots here to keep your initial risk small and under control. In this example, less than 2% of a sample $20,000 account. Market decline down, reached the typical wave 3 WPT for a profit of approximately 5.3 R or 5.3 risk units, or just over 5 times greater than the initial risk was available at this area here. But what also we can do is go back to our 4-hourly chart, which is our higher time frame chart, and place the next DP support zone on. Again, this can be on the chart in advance. So this would be from the last swing up. Here's the last swing low here. So we right mouse click, place the decision point on, and as you can see, we've just reached it here at the moment. If we go back to our hourly chart here, you could use this for your target. In other words, rather than coming out for the typical wave 3 WPT, you'd be looking to take profit at around this area here. That would have increased the profit up to about 7.2 R. If we look at the STF went strong back here. So if you had have used the ATR stop, you'd have probably been stopped out a bit here. But I think using the higher time frame targets would have been a better trade. So do you see what I did there? I went out to the 4-hourly chart. I placed the next support zone on the 4-hourly chart, which was the DP from this swing, and used that. The next level down would be the DP of this low here, which would be slightly lower. So you could have taken your choice on the hourly trade which level you wanted to come out at. At this area here, you'd be coming out at a 7.2 R profit, which is very nice indeed. A profit of 7 times greater than the initial risk would have been very good. Or if you're holding this to see if the market is going to go a little bit lower, the profit would be increased down to 9R at the next level down. But at the very least, if you did decide you wanted to take profit at this first level here, locking a 7R profit would be very nice. But do you see how we use the higher time frame chart? In other words, we're looking to take the trade on the hourly chart, but using the 4-hourly chart, not for the trades, but for the large degree trend. So when we had our TS4 sell here, on the 11th of December, we weren't looking to trade off that. We say after the 11th of December here, the large degree trend was down. Therefore, we move down to our shorter time frame chart, which in this case was the hourly. So after the 11th of December, which was up here, the largely trend was down. Therefore, you'd look to take this sell here, which was this TS1 short on the hourly chart. Then you decide on how to manage it, whether you're taking this as a holy grail trade setup, a wave 1, a wave 2, down to a wave 3 for 5.4-hour profit, or whether you look to take the trade down into the next higher time frame support zone, where the profit will be approximately 7R. So hopefully this has been a good example using Forex on the British pound US dollar chart here today on how we use multi-time frame analysis and MTPredictor, not to take all the trade setups that we have in the system, but looking to gauge the large degree trend on the higher time frame. Then once you've got a clear picture on that, which obviously isn't all the time, you only get a clear picture about half the time. This is what we call the cyclical nature of trading. But when the market is in a clear picture on the higher time frame, you then go to a shorter time frame, in this case the hourly chart, to pick your trade and your trend direction and then manage accordingly there. So hopefully this has been a good example, particularly over the Fed announcement on their rate hike yesterday. And as you can see, the British pound has carried on down into at least our higher time frame support zone, which we've just hit this morning. So hopefully a good example there on Forex, using multi-time frame analysis to be able to gauge your trend and trade directions using the MTPredictor software program.